So this morning I was talking to the team in chat about EAR. This was a mover that was up close to 90% pre-market. There was some good news that was pushing price action higher. I don't ever put too much value into what is going on pre-market or news for that matter. The big thing is that if there's a pre-market mover, I want to see if there's carry and follow through at the bell. So what I was saying in this particular situation this morning was, yes, this thing is up. It really does need to get over this sort of 885 level and keep pushing higher. And then on its first small micro pullback, I will have zero issues getting long this trade. Now you'll see what happens right out of the gate. So I always turn this off. I go in and I just look at the gap, and you can see the price action gaps up. Now it's got all the things that I'm looking for a setup. Having said that, it sets this 5-minute range, and that 5-minute range cannot hold long. What do I mean by that? I mean that the first 5-minute bar prints, and then holding long means it continues to go. But this thing opened up and immediately started to sell off. This was an optionable stock, so I thought to myself, you know what? There's going to be some value in getting short this thing, so it's exactly what I did. So what I like to do is I get into these gap ups. I'm looking for a gap and go, and I base that trade on first 5-minute range candle closing positively, and then continuation of that move. Now that didn't happen here. So the flip side to it, and this is what I refer to as a hedge thesis, is that if that first 5-minute bar closes negatively and we dip below the VWAP and we get any type of sort of bearish pattern like this bear flag right through here, then I like to get short. Now this is an optionable stock. The implied volatility was quite high on these options, but I decided to take this for a run to the downside. And so you can see right through here that I got into this thing, it started to move lower, and then we saw a bounce. You'll see interesting little bounce here at about $6.50. That is a longer term key level of structure and resistance that goes back into 2019. So it's no surprise that price action bounced off of this level. As soon as I indicated what was happening here and why price action was bouncing, I exited the trade. It was intraday. My primary focus was to get below the VWAP, break down lower, and see a full-blown reversion to the mean trade, meaning that I wanted to take this down to the 200-day simple moving average, if not close the entire gap, because sometimes you can get these great moves. And to be completely honest, if we move from $8.50 and we filled the gap to $4.50, I mean, you're talking about a 4-point play, and on some options, that can be a very, very explosive move. Now the bottom line is on EAR, we talked about this pre-market. It was up. I had zero faith or expectation that it was going to do anything other than do exactly what it wanted to do. And so when it showed me signs and signals that it was getting short, I followed suit. Bottom line is 33% gain intraday. And there's more stuff like this that we talk about. There's going to be a little link below in the description box of this video. You should check it out and see how we're getting in front of these trades all day, every day.